Good morning, UPB. It is a Monday, January 27th, 2014. Look at the market last week, getting mauled, destroyed, hammered. Yeah, the market does indeed fall from time to time. We had a similar day back in the middle of January, and then this one kind of exceeded it, our largest decline in quite a long time. Largest two-day decline in, gosh, I can't even remember. The market, I don't think it's ever fallen this much before. Being a little sarcastic there. But anyway, you can look from a long-term perspective. The trend remains up, okay? The one thing that I'm saying, and you can see this trend line from 2009 certainly remains to the upside. The Abenomics low back in November 2012 still has been bought every step of the way. So let's see if this one gets bought. But to me, if you just want to look from a shorter-term perspective, I've seen a lot of people talk about this head and shoulders pattern. I talked about this head and shoulders, short-term head and shoulders pattern, heading into the taper talk, and they did taper. And we rocketed higher, hitting new all-time highs. So this would be the left shoulder. This would be a right shoulder here. And then we could be looking to be forming a right shoulder. We'd have to get down to about the 177.50 level, bounce, hit about the 181, 181.50 level, consolidate there, and then we're going to plunge to, and to me, if you're looking for a downside target, 175, 174.50 would be the logical choice here, and that brings us to the Abenomics trend line low starting in November 2012. But anyway, that would make sense. We're pretty oversold here, and I think we're going to see a bounce. Let's go over some stocks that I like, then we're going to get into some earnings for this week. TLT. It's not a stock I like. I actually like it for downside. If you draw a trend line across from TLT, from its highs back in the middle of the summer of last year, and then you go back to the middle of the fall of this year, bring it across. We hit this level here, acted as resistance in the past. And from those price points, we've declined dramatically down to the 101 level. So I'm in the 107 puts. The TLT is down pre-market. We'll see if that continues. So I like TLT puts. I'm in the 107 puts this week at 50-cent entry. I like big lots for upside. I think big lots, although it looks like it's plunged here below support, it's right there at support. To me, looks like it's going to make a move back over $30. You look from a long-term chart perspective. I'll be waiting for a break under 27 to get out of this position, but I think we're right there. I think we're there for a bounce over 30. I also like 5 below. I like 5 above, actually. And this is really respected to trend line support. I think it's going to make move over 40 and then ultimately over the 42.50 to the 45 level. I'm in the 37.50s and the $40 calls here for FIVE. I also like Disney. Disney actually is looking pretty good here. A nice flagging pattern. I think it's going to make its way up and ultimately hit new all-time highs in the first half of this year. That would be Disney. Let's go into earnings. We have Apple after the bell today. And Apple, to me, and if you look from a long-term perspective, just go back on the chart, rally, consolidate, rally, consolidate, rally. I think Apple is poised, again, to break out here. And I'm going to put up a chart on the blog a little bit at optionmillionaires.com, this 10-year chart. But I think it's going to break out to the upside, over $600, possibly post-earnings tonight. STX, which is like WDC, took a big spill on Friday. But it's been a part of a long-term trend in these storage companies that store data. And really, if you look from a long-term perspective, this 3.5% decline to the downside does not in any way negate the upside momentum this stock has, just like Western Digital. I'm not going to trade it, but I'd be on the sidelines here because I think it's going to move upward post-earnings. We have U.S. Steel, which broke out to new multi-year highs recently, before pulling back to $30 level. This is almost a cup and handle formation, although I like to see it in a continuing trend, not in a long-term downtrend before forming that cup and handle. So you could almost say this is a a bearish pattern. It's kind of like, all right, have your last drink before we plunge to new lows. But I'm not so sure just yet. Some of the commodity-based stocks have been downgraded recently. Goldman Sachs has been downgrading some of the fertilizer stocks. I don't know. Stronger U.S. dollars, certainly not good. The dollar keeps rising in value, which is a good thing for the rest of us. It gives us a little more buying power. But if you're along some of these commodity-based stocks, you might want to be sitting on the sideline. U.S. Steel is going to be interesting to see if we continue this downward trend from the $30 break. or if we finally get some muscle and rebound here, and if this is truly indeed a cup and handle formation, we'll head up to $35 level. That's after the bell today. It's going to be interesting. We have Yahoo! That's Tuesday after the bell. Look at this rally. Broke through support here. I'm looking for a move down to about the $32 level over the next couple months for Yahoo. Yahoo's reporting earnings after the bell, so I'm looking for weakness, but I'm not going to trade it because I'm wary of this stock. Boeing, which is breaking down as well. You can see Boeing putting in a topping pattern here, could possibly roll over to the 115 level. That's Boeing. That's before the bell on Wednesday. After the bell, we have Facebook. Look at Facebook go. Facebook putting in higher highs, pull back. So Facebook, I would not be surprised. People are comparing Facebook, saying, "Oh, its market cap's too big, can't grow this much." Who cares? Over $60 post earnings. That would be an over 10% move. I could see something like that happening. We have Las Vegas Sands, which moved off of recent highs. Big candle down over 6%. Look at that. It's like, oh my goodness. But still, in the whole scheme of things, the trend line still remains to the upside. So Las Vegas Sands, it's going to be interesting to watch post earnings, see where it heads. Mellanox, which broke below the $40 level. This is a stock that traded as high as $120. Are we putting in some sort of a inverted bull flag, which would be a bear flag, and we're going to continue to the downside? I think earnings is going to have a lot to say about where Mellanox is headed longer term. And Qualcomm, look at this trend line, to me, very bearish for Qualcomm. Can't get above it. So Qualcomm, I'll be looking for some puts here. $72 level would actually act as some support here. We've had this before, so that to me is the more likely scenario for Qualcomm. And then finally, let's wrap it up. We have Google. Google's reporting earnings. Last earnings report, you can pull up the 6-month chart for Google, broke from, look at this beautiful resistance line, broke above it to support and then blasted higher. What are we going to get here? All right, we have short-term resistance support being broken. 1090 looks like the logical target, but guess what? The options are just so stinking expensive. This might be a trade that you can't really get into unless you want to put a lot of risk at work. If you look, really, volatility for the stock over the last 5 years has declined heading into earnings. So, on one side of the coin, it's a great time to be buying options for Google, out-of-the-money options for earnings, as we saw last earnings season. But on the other side of it, market's not pricing in much of a move. So maybe the market's saying, hey, best to be on the sidelines, maybe get in after the earnings report. We have Chipotle Mexican Grill as well reporting earnings, looking very weak. This gap here might get filled at the 440 level, so that would be a 10% move to the downside. That's a possible trade that I'll be looking to get into. And then finally, we have Amazon. Amazon broke over 400 new all-time highs. Beautiful candle, but support remains at this 380 level. I would not be surprised to see initial, like we've seen numerous times in the past for Amazon, an initial headline sell-off before a recovery and a move back over 400. This is going to be a stock that you want to trade via out-of-the-money stock options, most likely call options, when the market opens for trade on Friday, where there's going to be no premium. You're going to be able to get to $395 calls for a nickel, and they'll be worth $5 at the end of the session. And that's why we trade stock options, right? 10 contracts at $50 into $5,000. All right, UPB, optionmillionaires.com. I'll see you in the chat room. Any trades I make that I deem worthy of a mention, I'll bring it up. I'll put it in my private Twitter account and the chat room at optionmillionaires.com. Everyone have a great start to the trading week. It's going to be awesome. We have a lot of earnings coming up. We have Sam Adams, Mellanox. We have Tupperware, Boeing, VMW, Yahoo, Oshkosh Bigosh Trucks. Yeah, I want to buy one of those. And Apple, Seagate, US Steel, Ford, Nucor, Montelwach. List goes on and on. UPB. Goodbye.